What is the power of 3 and how can you capitalize on it? In this video, I'm going to cover power of 3 and the Judas swing simply because I was asked a lot about it. I'm not going to spend too much time editing. I'm just going to dive right into the charts and show you guys how you can master power of 3, how you can identify a Judas swing. Because both of these have one thing in common, and that's that you need to look at the daily time frame and where it's aiming to close. Now let's hop into the charts. Alright, first things first, we're going to start by analyzing the daily time frame for this week, what exactly happened, and how you could have capitalized it using the power of 3. So first things first, we were obviously starting off Monday's range right here with this bullish candle. Once this closed, we got a new bearish fair value gap right here. And during Tuesday's range, we swept Monday's low. During this sweep, I was obviously looking for buy side because we had this daily bearish fair value gap. So if we were looking for more sell side, we would likely tap into here and melt lower. That's obviously not what happened here because we didn't actually run all the way up. There was some buy side, but it wasn't enough to actually clear into this daily bearish fair value gap. And we ended up running lower instead. Then we ended up closing around this IFVG from Wednesday. And we got a ton of buy side from that on Thursday. Boom, huge amount of buy side. And when Thursday's range pulled back and closed, we got this bearish fair value gap. Then we got Friday's range, which once again tapped into this IFVG and started running on buy side. We got a nice close above this bullish Reaper, which is a bullish fair value gap, which was disrespected and once again respected, right? So from the open, we're going to be able to look for trades from here on higher. I'm obviously going to be aiming for this daily bearish fair value gap if we close above this one down here. Okay, so that in mind, let's actually dive into the lower time frames and see how we could capitalize, say, anticipating that this Wednesday candle was going to be bearish and aiming for, say, these lows. So let's start by marking out these lows right here. There's the first low. We don't really have to mark this one out. We're just going to aim for this. So liquidity. We're going to go back into replay mode and dive on a lower time frame. So let's go back into Wednesday's leg. Let's hop into the lower time frame, get rid of the stuff that hasn't yet formed. Boom. So we're aiming for this liquidity right here. We're going to slowly scale down lower. I accidentally went to the 4 minute, I think. Let's go to the 1 hour. There you go. So we're right now inside of Tuesday's range. Okay, let's dive even lower. Boom. So this is Tuesday's range right here on this daily candle. And we're trying to master power of 3. So first of all, what is power of 3? That's going to be 3 things. PO3. Which is going to be accumulation, or in other words, consolidation. That's the first factor. There's going to be manipulation and distribution. AMD, that's what it's called, the power of 3. And this power of 3 exists in every daily candle. So inside of every daily candle and inside of every single candle on every time frame, there's also 4 things inside each candle. That is the open, high, low, and close. So how does this look inside of a candle? You can see right here we have the open. So this is the open. After the previous day closes, we get the open, we get the high, we get the low, and then we close right here, right? So now just imagine this right here. We have the open. So 2652.76 was the open. The high was right here. The low is right here, and then we pulled up and closed, right? So that's how each candle works. And inside of each candle, there is this thing called the power of 3. And that's how you kind of understand how to trade inside of each daily candle. So let's look at where this exists. So you're going to need to zoom out a little bit and look at the stuff around. And that stuff around could be fair value gaps. It could be liquidity. So right here we have this high that we swept. So from the open, we obviously started consolidating. Remember, this is the 30-minute candle. So on the lower time frame, this market right here isn't going anywhere, right? 30-minute candle, 30-minute candle, 30-minute candle, 30-minute candle, 30-minute candle. So that's 1 hour, 2 hours, 3 hours, 4 hours where it didn't really do anything. That's consolidation, right? So from the open, we start consolidating. That's the first step, accumulation. The next thing is manipulation. We obviously manipulated on this high right here. So we took that high out, creating the new high of the day. And then once we started dropping lower, the distribution actually occurred from a fair value gap. So if you guys are experienced, you'll be able to see and keep up with me right here. But this right here is a fair value gap, right? From the bottom 1, 2, 3 candle range, from the bottom of the top one, top of the bottom one. That's a bearish fair value gap. So you can see that we got the first manipulation on sell side. So manipulation on buy side right here. Then we manipulated on sell side, right? We had this liquidity right here. And then there's also this low right here, right? There's a pretty clear liquidity that we took out right here. So manipulation typically has two sides. First, you accumulate. So the first step of PO3, you're accumulating. Manipulation aims to take out the buy side and then the sell side. So people think that the distribution actually occurs after this first move, but that's not exactly correct. The actual distribution occurs after we pull back up right here into an inefficiency. The distribution occurs after the manipulation takes out both sides of liquidity. So in this case, we have a bunch of accumulation right here. We took out the buy side, then we took out the sell side, and the actual distribution happens right here inside of this daily bearish fair value or 30-minute bearish fair value gap. So we tapped into that and we're looking for that sell side. So that is how Tuesday's candle was bearish. Right? I hope you guys understand this. It's pretty self-explanatory, and once you understand it, you'll really be able to see how each daily candle moves. So this is Tuesday's range. Remember that Wednesday was also bearish, so as we're about to get into Wednesday, we're going to look at Judas swing, and then we're going to look at the power of 3, obviously, in the next daily candle. So we're going to mark out this 30-minute fair value gap right here. I actually do remember exactly what happened on Wednesday. We have the open, okay? So this is how the daily candle looks right now. And I want you to kind of pay attention to what happens to this daily candle as we move on the lower time frame. So we started off Asia range with a nice bullish move up. So my Asia session model goes like this. You mark out the inefficiencies in the Judas swing leg. So how you know whether a move towards liquidity is a Judas swing or a actual continuation move, it depends on bias. So obviously I was bullish and I did end up getting out of my trade somewhere around here with a nice payout, but I was aiming for up here. We do now, after looking back, know that Wednesday's candle was bearish. So we're just going to go off the idea that it's bearish and we're going to be aiming for the sell side right here, as I mentioned earlier in this video. Right? So we're right here inside of Asia session, and what we're looking for is a close below this fair value gap, because this is obviously going to be the Judas swing. So how you know that it's a Judas swing is when the first hour of a kill zone, which is in this case Asia session on gold, the first hour moves away from the bias. So if our bias is the liquidity and the daily fair value gap down here, then this first move is obviously going to be a fake out, right? So we moved right here an hour, right? Asia session started right here at 8 p.m. and we moved the first two 30-minute candles. So 1 hour was bullish. You see that? Pushing into this 30-minute fair value gap, but staying within it, right? Now we're starting to get the sell side. So obviously if we're bearish and this first hour was bullish, the Judas swing, then we can expect sell side and be confident in it. So there you go, we're drawing into it and we closed below it right there. So in IFVG, sometimes it taps in, other times it doesn't. The main idea is that we already closed below it and exchanged buyers right here inside of this buy side fair value gap, right? Because this was a bullish fair value gap. And once we close below it, it's now a bearish IFVG. So this is the basic idea of a Asian breaker model, where we get the fake out move in the Judas swing. Then we get the sell side in creating a IFVG from the fake out leg. And then we could trade from this IFVG to the actual target. So now that we got the manipulation, right? Going back to power of 3, we got the manipulation towards buy side, towards sell side right here. And We already manipulated on that. And then you ask yourself, okay, we manipulated on both sides of liquidity. Where are we going to go now? And in this case, we obviously know that it's going to draw down here. So we can take a trade from the IFEG right here. Even if it pulls up, we're kind of safe. We're going to put our stop loss right above these little highs right here, the swing high, and we're going to aim for this sell side. So there you go. We did pull up into it. Boom. You could have gotten a nice entry if you were patient. Doesn't really matter though, right? Because you're going to make money either way if you're selling to this level. So there you go. We tapped in and we're going to be looking for the sell side. So we ended up pulling a little bit higher. That's fine. The IFEG got disrespected, but there's going to be a new fair value gap right here. So we're just going to move that right here. And let's look for that IFEG once more. There you go. We got it again. Let's go in for a sell. Secure it above the nearest high, and then we're obviously going to aim for the liquidity down here. So there you go. A lot more consolidation than I thought. I guess I didn't remember what exactly happened on Wednesday. But yeah, the idea is that we manipulate it on both sides of liquidity. If we get that IFEG, then we trade from the IFEG. We want to secure our stop loss and aim for our draw on liquidity. So we finally get that move inside of New York session, and we get a ton of sell side, probably following from Wednesday. We had news at 2 p.m. Let's pull that up. Yeah, 2 p.m. So let's keep an eye on that. That explains the consolidation. So this is December price action. We don't want to be expecting too much precision, but the idea and the theory behind why it moves is still valid. And you want to note this for better conditions where you can actually take advantage of it. So 2 p.m. we're already getting a ton of sell side before that, and then 2 p.m. hits right here and we draw all the way down. So after that, we just got a crazy amount of sell side. We swept that liquidity and we drew into the daily IFEG right there. Okay, and we draw down to that fair value gap. That is our PO3 inside of this leg, right? From the open, we made this high inside of this 30-minute fair value gap. We even tapped in it again, unfortunately disrespecting the IFEG down here. But then we did get another IFEG that we created right here. And London session was just a little more choppy than I expected. And the actual move happened later inside of New York session, still using that same exact IFEG and this new order block that formed. You don't really need to overcomplicate your trading with all this like jargon. Fair value gaps are really the only thing. Fair value gaps and IFEGs. But if you do learn order blocks, they're not gonna affect your trading in any negative way. But yeah, that's the idea. If your draw on liquidity is lower and the first hour of your session is in the opposite direction, you can see that London session, first hour, or it was actually the silver bullet. Right before the silver bullet at 4 a.m. we ran up. So that would be the Judas swing against the actual bias before we pulled down and went lower. Yeah. That's kind of the basic breakdown. I want you to go into your own charts using these rules right here. So look at the open high low close of the daily candle and look at inside of that open high low close for the accumulation, which would be the consolidation, the manipulation on both sides of liquidity, and then the actual distribution from an inefficiency like a FVG or an IFVG. That's the basic breakdown of what power of 3 is and how to identify that Judas swing within the daily candle. Thanks for watching. I'll catch you guys next time.